This is an emergency update for Palantir shareholders or people looking to get into Palantir. Palantir has taken a significant haircut from $84 all the way down to $67.26 as of Friday today. By the time you're watching this, it's probably Monday or Tuesday. And Palantir has definitely taken a haircut. So I'm going to share with you exactly where I think Palantir is going. Year to date, we are down 11% for the year. Last year, we were up like 300%, which is pretty great. And I think Palantir, this will be the last time that you ever see $60 on a Palantir share. Okay, I think this is the last time you will ever see it. So by the time you're watching this video, I believe this will be the last time you'll be able to get into Palantir at a discount, either buying shares or getting into specific leaps options, which I'll cover. Now, I believe Palantir has a lot of catalysts ahead of it. They're getting into the hospital space, the healthcare space, just like Amazon is, right? AI for hospitals, if you go onto their YouTube channel. And you could also see all of the companies, the commercial business that they're doing, right? With all the companies that spoke at their Palantir pre-event 2024. All of these companies right here, and a lot of them like Tampa General Hospital, Nebraska Medicine, right? Fujitsu, AT&T, and even Ferrari. I've known they've been a partner with Ferrari for quite a while now, but they are really expanding their commercial business. And I believe that's the catalyst going forward. And I believe they're just getting started, especially with AI technology. Companies know that they have to implement it into their business, and whoever doesn't is going to literally be left out on the sidelines. So if we look at Palantir PE ratios, this is what I like. So Palantir last November, right, last year in 2024, around November 27th, their PE ratio was 330. Okay, so you're paying 330 times earnings for a share of their company. Now they are trading around the same PE ratio as a month and a half ago. So you're getting a month and a half discount, and there's no better time to get in than now. Okay, I believe that this will be 1,000 PE ratio company just because of the hype, the sentiment, the CEO, and the industry that it's in, which is AI technology. It's the hottest industry as of right now. So why I like this and why I think it'll be 1,000 PE ratio company is because some of your favorite companies and some of my favorite companies have been 1,000 PE ratio company. I remember back when I was working at one of the largest investment banks, I wanted to make an investment into one specific company that is now $1 trillion company. And that was Amazon, okay? This was back in 2014. They didn't even have earnings, right? Back in 2015, they had a negative PE ratio because they weren't a profitable company. And then finally they went profitable in December 2014. Their PE ratio was over 1,000. There's another company just like it. It's called Tesla, right? Just in 2021, their PE ratio was 1,300. And the reason is because people are willing to pay for growth, right? These are growth companies. These are not companies that you look at the traditional valuations and you look at and you say, oh, well, their PE ratio is over 30, so I think it's too high. These are companies that are going to change the future. And that's why I believe Palantir is going to continue going up, because it's technology that's going to change the future, right? Now, if we look at the overall market, let's kind of take a look at what happened and why Palantir actually came down, because there's no fundamental reason that Palantir came down, okay? Their earnings are great. They're continuing to secure new partnerships. In fact, in the past month, they secured like 5 or 6 new partnerships. And we're going to hear about that in the next earnings, which is February 3rd, okay? But what brought down Palantir, just like any other stock that we're holding, is the overall market. If we look at QQQ, okay, we're looking at the daily time frame, we are at the lower end of the Bollinger Band, all right? QQQ closed at what, 507 today. I believe by the time you're watching this video, we'll be somewhere between 500 and 520, somewhere in that range, okay? That's just kind of the expected range. We're at the lower Bollinger Band. We've already breached it a little bit, and we could dump on Monday to 500, potentially even 495 as a low, all right? But I believe that will be a bounce moment because the Fed is continuing to lower interest rates. Yes, the non-farm payrolls came in a little bit hot, right? And that's not good for inflation, but I believe that the Fed will stick in this lowering interest rate environment for the next few years, all right? So that is a good thing for the stock market, and that is why Palantir came down. The overall market came down, and even the VIX, this is the most important indicator I look at when trading options on stocks, is the fear index of the S&P 500. The VIX breached 20, which is my indicator to say that, okay, there's a lot of fear in the market. This is time to take an opportunity, right? Just like back in August, we had this huge spike to 67, which we haven't seen since 2020. And that would have been a good move for you to buy that dip, right? That's VIX spiked at the same time, right? 67. At the same time, QQQ went all the way down to 423 from 503, okay? So that's what I look at. VIX spiked, we're above 20. This is a good time to go ahead and start buying leaps options, start buying shares of your favorite companies, and Palantir is definitely on that list. So let's talk about price levels, all right? I know by the time you're watching this video, the price will be different than it is right now, okay? Don't worry, I'm gonna talk about price levels and where I wouldn't be buying and where I would be buying, okay? So I'm gonna try to release this video as soon as possible, but right now we are trading at one of the lowest levels on the RSI. Okay, the last time we did that was back in August when we had that overall huge market correction. We're kind of seeing the same thing. When the market pulls back, then the more riskier stocks are going to be pull back even more. They're going to feel more effect from the market going down, okay? So, and when they don't, that's an indicator that, hey, that's a good stock to hold because it's going to go up. NVIDIA is one of those. But Palantir definitely took a beating from this market pull down. And today, and yesterday, it breached the lower Bollinger Band twice. I haven't seen that since back in August, right? And then look what happened when that happened, okay? Boom, we went literally from 21 bucks all the way up to 31 bucks within like 5 days, okay? So I think that's what's gonna happen. We may see one more flush. If QQQ flushes, we may see a flush all the way down to 60, all right? And at worst case scenario, 55. That's what the market makers are pricing in on February 7th, the week of expiration, which we'll get into. But I don't think we're going to see that level, okay? I don't think we're going to, we may go down to 60, worst case scenario, but I don't think we're going to see 55. Obviously, the market makers are pricing in a plus or minus $11 move, okay? What I think we're going to see is if the market opens down on Monday, we're going to see a little flush, maybe down here to 60, and then we're going to bounce really hard and the market's going to continue upwards. If that doesn't happen, then what's going to happen is the market is going to go open up on Monday and it's going to continue kind of rebounding, and we're just going to see Palantir go from here just straight up. And I think we're going to go straight up, basically like a V-shaped recovery up until February 3rd, right? Which is earnings, so be aware of that. Earnings is on February 3rd. I think it's after the bell. I believe we'll be at $80 by then, okay? So I would be buying anywhere between, obviously if it's below 60, you can buy anything below there, but anywhere between 60 and $76, okay? 60 and $76. Once we are above 76, I would only stick with cash secured puts, all right? If you wanna be safe, or just buy shares. But I'm gonna show you how to lever up your money to basically win big, okay? As you can see, I have these call options right here that expire anywhere from 371 days out all the way to 707 days out, which is like 2 years, okay? I'm already up. I have a little bit of a buffer on these. These were all up before, like $5,000 to $6,000, all right? Now I'm down on these ones, and then I'm slightly up on those. That's what happens when the market pulls back. So just be aware, because I'm controlling 1,500 shares with these call options. So I'm gonna show you which call option I would do, and then we'll get into kind of a safer strategy if Palantir is above 76 by the time you're watching this video. If it's anywhere below, you're good to go with these strategies, okay? So what I would do is I would go to January 16th, 2026. If you're planning on getting out after the next big run up, maybe after earnings or even prior to earnings. The reason I go out so far is because let's just say we plan for it to go up in 2 months or a month and a half, and it takes 4 months, right? At least we have some extra time. We have 8 extra months of time to maybe continue in participating. If we think, oh, wow, okay, it's up and we just want to keep holding, you have time to do that. Where if you're going to a short dated option, you are going to get smacked by time decay, which I don't want to happen to you, okay? I'm trying to make you money here on this channel. So just look at what I'm doing, and obviously it's not financial advice, but just take what I'm doing with a grain of salt and then kind of apply that to your own strategy. So I like to go out either a year or 2 years. You could go either one, but let's just go out a year, okay? So this Jan 16, 2026, and you're gonna go to the 71 delta strike, which is 60, okay? That's $2,100 to control 100 shares. And basically you get to control 100 shares for a third of the price, because you would have to pay $6,600 right now at today's price if you wanted to control 100 shares. So this will allow you to lever up your money, get 3 times the amount of return per the capital that's required, okay? Now, downside risk. Obviously, by expiration for these ones, you can lose the whole premium, or the stock basically has to be at $81 for you to break even in 371 days, okay? So as long as you believe that Palantir is gonna be at 81 or higher, you're going to make money or break even. But I believe we're going much higher. And I'll talk about price points too. I believe that if those earnings are good, okay? If those earnings meet expectations or exceed expectations, which I definitely believe they will, that's why I'm in it for the long term, I think we're going straight to 90 to 100. I'm adjusting this price range because I was a little too bullish before, but now I'm saying 90 to 100, somewhere in that range. So you could set 90 as an exit point for yourself. If you want to just take half off the table and leave the rest, you could do that. That's what I plan on doing. Just taking, maybe a quarter off the table, not half, and then waiting for obviously May later in the year, which I believe will be between $120 and $140, okay? Which is not a big price move. Like this is 20% up from here, and then this would be another 20%, right, from there. So last year the stock returned over 300. So I believe it's definitely doable, and the PE ratio will be high on the stock. So just keep that in mind if we're all the way up at 120. So those are kind of my targets. Now, again, the 60 strike is a good one, okay? If you want to go out to December 18th, 2026, kind of at the end of next year, you can go to the, what strike would that be? Wow, that's at the money. So you can go at the money to the 65 strike, or you could go a little bit higher if you want to be safer, go to the 57.5, okay? To the 75 delta. And basically those are the 2 leaps options that I would utilize to leverage your money. Now, if you want to be super safe, okay, I also play this strategy, which is cash secured puts. I have a 70 cash secured put and a 67, meaning I sell a put option, I collect a premium of $965 here on the 70s, and if the stock finishes below $70 by expiration, I will have to purchase 100 shares, and I will still get to collect my $965. So I get paid to dollar cost average. This is also how I make a significant income in the stock market, is doing this. So what I would do is I would go 30 days out, okay? You can actually go to earnings week if you would like. And you would go basically to the, let's see which delta you'd go on the put side, all right? We'd go to the 30 delta. So you're basically going to go out of the money, and you're going to go all the way down here to either 61 or the 62 strike, all right? If you want to be safe, you can go 25 delta, but the return on your money is not going to be as good. So let's just go to the 31 delta and calculate that return. So this is more of a guaranteed type of return, because you're going to get paid the premium if you let it go till expiration. So obviously, if Palantir goes way up, you're not going to make as much as you would at just holding the shares, but this is guaranteed income right here, and that's what I like, guaranteed income. So let's do the math. 282 divided by 62, which is the strike price, gives you a 4.5% return in 28 days, okay? If you just did that all year, which I do, I run the wheel on Palantir, which I'll have a video at the end that goes over it, and I do have one in the description, but if you did that all year, you'd be making over 60% returns just collecting premium on Palantir, okay? So that's exactly what I would do. I'd do the leaps or the cash secured puts. But if you got value out of this video, make sure to thumbs up, and I'll see you in the next one, which I'm gonna link right here, which goes over that wheel strategy. Check this one out, and I'll see you in the next one. Take care.